the $50 billion playbook. All right, so if you've seen the investment materials, you will have recognized the next slide. So the current playbook takes them to 50 billion in revenue. Right now, run rate revenue is, I don't know, $2 or $3 billion, or 5 billion, I think. But the playbook, 50 billion. So what do you need, 4% market share across 100 markets. What do you need to believe for that to be true? Because right now, Opendoor is operating at a fraction of that. And this is clearly aspirational, but it's also quite uncertain. So first off, it's worth noting that the biggest market is Phoenix, right? So that's got a $1 billion run rate revenue, all right? So Phoenix is 1 billion, the master plan is 50 billion. So to get to 50 billion, what you need to believe is that they can create 50 Phoenixes or 100 markets half the size of Phoenix. All right, so Phoenix is kind of the benchmark here. I think there's an open question, is that the target or is it an outlier? But Phoenix is huge, and Phoenix is really, if you saw my my article I sent out a couple of days ago, I mean, it's a mega market. Phoenix is where iBuying started. It's the best iBuyer market. It's always been the biggest from a transaction count and sales volume perspective. It's always been the perfect market. You have to believe there's 50 other Phoenixes out there, or 100 that are half that. Phoenix, again, mega market. Right now, Phoenix accounts for a quarter of Opendoor's revenue. So I made a mistake in my article I sent out a couple of days ago. It's actually a quarter. It's not bigger than that. So it's a quarter of the revenue. All right, and it's about 20% of the total sales volume compared to Opendoor's top 15, 20 markets here. So that's huge. It's a big mega market, right? And if you look at this, here you have Phoenix, the closest ones in 2019, Atlanta and Dallas, and that's about half. So if you think you need 50 Phoenixes, well, right now there's one Phoenix and nobody comes close. If you need 100 markets half the size, well, right now only Atlanta and Dallas chin the bar and cross that threshold. So that's kind of where we are right now. You probably will have seen this in the investor deck, right? So this is kind of showing Opendoor showing their launching of new markets, right? So over the first 12 months of operation, what does the market share look like over time? And it shows Phoenix compared to the next 5 markets, compared to the next 15 markets. And what it shows is it's absolutely true. It says over the first year, Opendoor is able to spin up these new markets relatively quickly, right? Buying and selling houses. And it's getting better. It's getting better over time. But I think there's a bit of a nuance here. What happens if you would extend this blue Phoenix graph out beyond? This is what you get. This is 4 years of market share in Phoenix. And yeah, I don't know, it is what it is. It's not a straight line. There's ups and downs relative through seasonality. But I think the key here is it's taken 4 years of grind to get to 4%. Think of the tens, hundreds of millions of dollars invested into this market. And the time, right? It's taken 4 years to get to that point. Now, if we go back to this chart, right, the one we were talking about, starting the first 12 months, what I'm comparing, I have my own chart over here, and that's actually, it's not market share, but it's volume. Because I think in this case, volume is a little bit more apt because that translates directly to revenue. You can have a high market share in a small market, but that means the same thing as a low market share in a big market. So I'm looking at just volumes. And over here is the first 12 months of operation for Phoenix, compared to the average of the next top 10 markets, all right? The next 10 that Opendoor launched. So a little bit different than the next 5 and the next 15, but I mean, you get where we're going. It looks similar, right? Looks really similar. Over those next markets, Opendoor is getting more efficient and they're able to increase volumes faster over time, which is an impressive feat. But where this gets interesting is if you extend this graph another 12 months, and that's that. So what you see is, I think you see 2 things. One is, Phoenix really accelerates to show how much energy and effort and money and capital was put into Phoenix to grow that market. Secondly, it shows this plateauing of every other market. So it's not this line that keeps going up and to the right. It's plateaued, and I think that's definitely worth noting. Another way to look at the data here in terms of market growth is this. This is looking at the past 2 years of Opendoor sales, right? These are the transaction volumes. I'm looking at the houses Opendoor sells. Past 2 years, from January 2018 all the way up through March 2020. All right, so we have Phoenix in blue, and we have an average of the next 5 markets that Opendoor talks about. So here's another way to look at it. I mean, Phoenix is still far and above bigger than the average of all those other markets. And actually you see the same kind of plateauing, even decrease here in the past year. And I remind you, right, compare that against this. If you look at just that graph on the left, you think, oh, it's all growth all the time. It's so easy. Everything just keeps going up and to the right. It's not the case. If you look at this, there's a significant plateauing. So this graph here shows that Opendoor is really good at launching new markets. But what we've seen over the past couple of years is eventually there's this plateauing, and that plateauing occurs pretty quick, kind of after that 12-month period. And we've seen that plateauing off the past couple of years. Now this is that same graph we were looking at, but broken down by market. So we're looking at those next 5 markets, which is Atlanta, Vegas, Dallas, Orlando, and Raleigh. All right. And you can see, again, this is over the past 2 years. Phoenix is still far and away the best one up there. But when you kind of break apart the average, you see the individual components. And I think, over the past year, you see markets like Dallas, Vegas, and Orlando going down. So they're not growing, they're not plateaued, they're actually going down. And out of all those, really, you see, Raleigh a bit, and Atlanta, improving. And Atlanta is getting tantalizingly close to Phoenix in terms of transaction volume. So that's great. It's one to watch. So wrapping this section up, I mean, both of these things are true, right? Opendoor's graph on the left, market share by market maturity, first 12 months, like that is absolutely true. But what is also true is this chart on the right, that after those 12 months, things kind of plateau. And the evidence, the data we've seen over the past couple of years is that, no other markets have been able to grow to anywhere close to the same significance of Phoenix. So to believe the $50 billion plan, you need 50 Phoenixes or 100 markets half that size. Here's the data, right? Here's some of the evidence. I think it's very early to say, yes, that's absolutely true. And it is, for me at least, too much of a leap of faith to just look at this one to the left and think, oh yeah, it's a bygone conclusion. Every market will become a Phoenix eventually. Everyone having fun? I'm having a great time. This is awesome.